All right. Good morning, everyone. It's Reed Tattersall with Back Nine. Thanks for showing up. Today we have some more exciting news. We kind of previewed this on the last webinar with Pac Life's accelerated underwriting for ages 50 to 69, no exam up to 1 million. Today we have the addition of our second IUL insurance company on Quote and Apply. So for term and other lines, we've for a long time had a number of insurance companies. I think we have about 13 term companies that'll show up, including Nationwide. On the IUL side, things have taken a bit longer, and we've made some progress. Thank you to our friends at Nationwide. It's actually been really interesting to work with the IT side of these insurance companies to see how set up, and kudos to the Nationwide IT side. They have been the most developed, most supportive IT team that we've worked with yet. So for those of you that don't know, Quote and Apply is multi-carrier, consumer and agent quoting and e-application software for life insurance. It's a mouthful, I know. And it can be embedded into your website. I'll show you a couple different examples. So for example, here's a credit union with Quote and Apply embedded. Here is a kind of like a direct-to-consumer company, Quote and Apply embedded right there. And then we still get the majority of our applications off of websites that we set up for agents that we'll call a microsite or a link. This is it. So it's just a public web page that you can bookmark, you can put on social media, you can put in your email signature, and this is mine. Right, apply/Reed Tattersall. Contact section will have all my information. Yours will be apply/your name, and yeah, you can direct clients there or use it yourself. Okay, so I'm going to use our demo website, theintelligentquote.com, and show you how this is done. So I'm going to have a client. I'm going to call him John Brandonson. And we'll hit next. John's a male. I'm going to say John is in relatively good health. If you hover over any of these hearts, you'll see the actual insurance rating that we're going to give. So we'll see standard plus, preferred, super preferred. We'll just pick 4 hearts, which is preferred. Nicotine and cannabis use. This is really helpful. Use it because we will show you the insurance company that's best for your client. So if your client previously used, right, and they previously used to use cigarettes, maybe that's in their medical records, put this in, we'll direct you to the best insurance company. If they currently use and they currently smoke cigars, for example, and they smoke them weekly, some companies are going to rate your client tobacco, some are going to rate them non-tobacco, so this is a helpful tool. And then same thing with height and weight. I'm going to skip this. A lot of agents don't know that this is actually optional. There's a skip button here. You don't have to have a client's build to run a proposal on them, but if you suspect or if the client has build issues, put it in here. And we're going to say John is January 2nd, 1987. So we're going to say he's a young, high-income earner. So by default, it still goes to term insurance. We have term for $1 million, all our different term lengths. For term, we just drag the slider for how much we want, and the rates will be down here. A lot of different types of term products. There's a needs analysis calculator here if you need help determining the right amount of insurance. And then as we go over to the permanent category, we have all of our permanent products. If we hover over this little icon here, this is our highest cash value product. This is what we're going to be focusing on. In addition to the accumulation IUL, there's final expense, guarantee UL, which is like term for life, protection IUL, and universal life. So with the Nationwide IUL, we just have their accumulation IUL. We will in time be adding their guarantee UL, which will actually, it already falls under here, but we'll add more illustration capabilities because right now the guarantee UL is just a level pay. And we're really looking forward to adding their protection IUL as that's a more popular IUL product. So for today, we're going to use the accumulation IUL. And when you're phrasing accumulation IUL to a client, it's much less of a death benefit sale. It's much more of a, hey, how much money are you able to contribute to an account that isn't subject to state income taxes, isn't subject to federal, no Medicare taxes, no extra Obama taxes, doesn't cause you to phase out in exemptions when that income comes to you. One of our wholesalers used to say that this generates non-reportable tax-free income. That sounds really good. So when you walk someone through the ability to have this downside protection, have the upside potential, and you show them the markets are generally up, and you show them that they can create an account that isn't subject to all these taxes, the question that I ask is how much money would you like to put into this type of account? And you want to hear them say, I want to put in all of it. That's probably going to be too much, right? Life insurance is not, let's say, a liquid investment, at least not right away. And it takes a little while for life insurance to make sense, right? So we're looking at long-term tax-deferred growth with compound interest, essentially. So let's say I'll just kind of pick on my sample John client, and John can contribute an extra $500 a month. So all I did is I dragged the slider, which defaults to 1,000. I could have a fantastic client who wants to put in 10 grand a month, and we do these cases. At the same time, we can have a client that just wants to put in $100 a month. So whatever number you want, just pick it. Next. And then this used to be a much longer process. We used to log into illustration software and kind of tee it all up and design it and then run different insurance companies. Now all I really have to do is hit the next button. So this is the story that I would be telling. I would say, hey John, your contribution of $500 per month for 10 years. I'm just making this a short-term commitment. That's our default is 10 years. We can change this to 5 years, 15 years. He can pay this for life. Heck, he doesn't even need to follow this payment schedule. This is flexible, premium, universal life. So if I start with 10 years and I decide I only want to pay 5, that's no problem. If I start with 10 and I decide I want to pay 20, that's not a problem either. So my contribution of $500 per month for 10 years is projected to provide a little over $1,800 per month of tax-free income. That's per month of tax-free income from ages 65 to 90. This is just the story of compound interest without taxation. You can click here to learn more about tax-free income. Some agents use this proposal to walk clients through, hey, here are all the taxes that you're subject to. We have top tax rates, we have payroll taxes, social security taxes, employment taxes, and then we have these different buckets. So for example, with life insurance, we get tax deferred growth, tax advantage distributions, which means when the money comes out, there's no tax on that, even the gain portion. We have no penalties for early withdrawals, like with a pension plan or an IRA. If I need to access this pre-59.5, I'm going to be paying that IRS 10% penalty. So a lot of times if you have young clients, maybe like an athlete, for example, stuffing money into a qualified plan isn't a bad idea, but do consider that they're probably not going to have access to that until they're 60 years old. So if your client is 25 now or 30 now, and they can't access it for another 30 years, this is another area where life insurance can fit in. Will not increase tax expenses, Social Security taxation, or Medicare tax premiums. So when you take income or investment gain, that can cause you to phase out of other exemptions, essentially moving more money from your pocket to Uncle Sam. So that's that life insurance creates non-reportable tax-free income. When you pull money out of a life insurance policy, let's say I pull out 100 grand this year, nowhere does that show up on my tax return. Interesting. And then also we have this income tax-free death benefit. So with taxable investments, this is like non-qualified, my brokerage account, right? If I sell a stock, I'm going to have to pay long-term or short-term capital gains. All other types of investments kind of have some of these limitations. So this is a nationwide demo, and John Hancock came up first. We are a brokerage company. You know, our job is to show you the best products that we have available. And in this case design, Nationwide wasn't the top. I will show you a spot that they will be the top. So one area where Nationwide is going to exceed better than John Hancock, which is one of the leading insurance companies from an illustration perspective for IUL, is when we look at lower interest rates. So we illustrate the default rate, which with John Hancock is 6.12, and with Nationwide is 5.76. So right off the bat, it's not an apples to apples comparison, because we're illustrating these products at the max rate that the insurance companies will allow. And when that happens, Nationwide just doesn't generate as much income. Now, watch what happens, for example, when I change it from the default interest rate and I take a 20% reduction. And I go ahead and I run this illustration. John Hancock didn't come up, so our apologies, they're supposed to come up. And I don't know why. Let's run another case. So I'm going to fund this for 15 years, 20% reduction. There we go. If it doesn't work, push the button again. No, bad advice. So here in this example, Hancock is able to generate $2,904 a month, and Nationwide can generate $3,051. So Nationwide is actually able to generate more income than John Hancock when they both have a 20% reduction. So why is that? John Hancock has a significantly higher multiplier built into their policy. So if you earn their historical rate, yes, you're going to have more money than Nationwide. If we operate under more conservative assumptions, though, the Nationwide product actually performs better than John Hancock. So that would be one reason I would choose Nationwide, would be I have a more conservative client. Another reason is a lot of people like the name Nationwide. So for client recognition, name recognition, it's a fantastic option. And then last but probably not least is Nationwide is a mutual insurance company, and John Hancock is a stock insurance company. There aren't too many mutual index life insurance companies out there. Most of them are whole life. Think Mass Mutual, Penn Mutual, New York Life, those types of insurance companies. And the nice thing about having a mutual company is they aren't held to you know, the stockholders' needs that quarter, that year. Nationwide can have a more long-term outlook on the performance of their insurance company, and also their policyholders or their owners are the policyholders. So when you're dealing with a situation where you have lots of non-guaranteed elements within a life insurance policy, it's great to know that you are the ultimate person as the policy owner that the insurance company is trying to please. So if anybody has any questions on these inputs, feel free to write them in the chat. But down below, I can customize this. So if I needed to say, hey, my client doesn't want to pay monthly, they want to put in $10,000 and they want to pay it annually, and we just want to pay for 5 years, I can change the state, I can change the reduction. Let's say I want to do a 10% reduction. Most people don't use this reduction because most people show the client the most optimistic presentation, but it is useful for you as an agent to understand how these different products compare under different situations. We can also change our income. So income is this, hey, this $3,000 a month, tax-free income from ages 65 to 90. I don't want to take income from 65 to 90. I'm young, right? And I want to retire soon, right? I want to take income from 60 to 80. It's as simple as that. Rerun the illustration. And there we go. So in this situation, Hancock's going to give me 686, and Nationwide is actually going to give me 951. You may want to take a look at the illustration. So just click this red PDF icon. It'll download a PDF down here. And then here we go. Nationwide has plenty of supplemental ledgers and internal rate of return reports. So all that is available to you. Here's that ledger. Here's that income coming out. So there are different solve types. This is the most common for accumulation IUL. It's, hey, I want to put in X amount of money, which is I want to put in $10,000 of premium. Tell me what the death benefit is. If I wanted to say, hey, I just don't like these numbers, right? I don't like 358. I like 10,000, but my client just wants to see a nice round number. There's a no solve option where you can just specify the death benefit and specify the premium. So if I wanted to just say, hey, I'm going to put in, I want 400,000 default rate, 5 years, run illustration. There we go. Another type of solve is a death benefit, or excuse me, a premium solve. So let's say I wanted to have a situation where I want to have 500,000 of death benefit, and I want to pay the max premium possible, and I want to pay that for 10 years. You can turn the income off. I'll show you that. Run illustration. So hopefully that's making sense to people. So in this situation, I said, hey, I want to have 500,000 of death benefit. The reason this says 509 is because this is an increasing death benefit. And tell me how much premium I can put in. It's right here. If anybody has questions on this, obviously we're here to walk you through. We have some information online to share with you. But look at this performance. So I'm going to put in $14,000 for 10 years. And I'm projected to accumulate $302,000 in 20 years. So I've put in 140,000 and change. I have 302,000. This policy from there is just going to start cooking, and then I can pull that money out without incurring income taxes. So for a portion of your clients' maybe safe to moderate risk portfolio, you can see them peeling off 5% of their income or 10% of their income and putting it into an indexed universal life policy. We have one other feature that I wanted to show. It's not available when you do a minimum or maximum kind of design. If I do more of like a target design, so let's say I do I solve for target, we give you the option to add both insurance companies' long-term care rider. So LTC is on a life insurance policy is just amazing. So it gives the client the ability to spend the death benefit while they're alive to pay for long-term care. It gives the client the ability to receive 100% of that death benefit. So let's say my death benefit is 500,000. I am going to get that 500,000 either when I'm alive via long-term care or when I pass away. So for clients that are kind of scared of that use it or lose it, hey, this may be intimidating to put $5,000 a year into something that I may never get. We can show them a way to guarantee they're going to get their money back and more. So we have a couple options on the long-term care design. So percentage of death benefit per month for LTC, it defaults to 4%. So this would be 4% of the 500,000. We can change this to the 1, 2, 3, 4. So I'll choose 2%. The lower this is, the lower the fee for the long-term care. If I were to say generally how much it costs about 10% more in terms of the fees in the policy to add the long-term care rider. So let's pick Nationwide again. And in this design, I can receive up to 2% of the $500,000 death benefit, which is $10,000 per month, for a total maximum of $500,000 to pay for long-term care costs. So in this example, I've paid almost $5 grand a year for 10 years. Then I have all my money back plus some in 20 years. This is obviously assuming current assumptions, which is the 5.76 return of Nationwide. So I got cash value, I have permanent insurance, and I have the ability to spend that entire death benefit while I'm alive on long-term care. So that's kind of it for the illustration capabilities. We have a kind of a learn more video that explains cash value IUL, so you may want to take a look at that. Let's say I'm ready to apply. I'm going to go ahead and kind of go back to our traditional design. So got a client, they're going to put in $10,000 a year for 10 years. I want a minimum death benefit. I'm going to assume the historical or the max illustrated rate, and I will show my client income from ages 65 to 90. So just like with term insurance, we have the ability to apply online. So Quote and Apply is also an e-application that uses DocuSign. And all we need to do is hit this big blue Apply Online button and start to go through the application. You can put in this information a number of different ways. That's kind of what makes Quote and Apply so flexible. I could be talking to the client, John, over the phone, and I could key this information in. He could be at my office with me, or I'm at his office potentially. I can send a link to John. For example, I'll click the invite and I'll copy this link, and I can say, hey John, at your convenience, go ahead and fill out the application yourself. Everything is saved every time I hit this next button. So all your progress is saved within Boss, which means that you can start, stop, and you can see the status of the application at any point in time. So plug in an address, employment information. We'll support all policy ownership types. So you want to have a trust, business, father, mother, brother, sister, situation, own the policy, that's no problem. 9 out of 10 cases, we have the insured be the owner. I'm going to click yes. And then we're going to add Jane Doe, wife, as the beneficiary for 100%. It defaults to 100%. If you need to change it, just change it, and it'll prompt you to add more beneficiaries. Just gonna leave it as 100. You can add an optional contingent, Benny. Same thing, individual trust, business trust. I'm gonna skip this. We'll make up some income, some assets, some liabilities, some fake info here. We support existing insurance, replacing insurance, etc. So let's say I was doing a replacement. I'll say I'm replacing a Mass Mutual policy. So I'll just pick the status, right? This is active, being replaced. If I was doing a 1035, I'd pick this option. If it was pending insurance, I'd pick pending. Say 01/01/2000, say end of term. Fortunately, Nationwide is a very short application, which makes this step really easy. I didn't put in my height and weight when I initially got a quote, so I will have to put it in now. So let's say I'm 5'9", 160. And if that was an issue, it would let me know. Would you like to speed up underwriting by providing your electronic health records? This is Back9's instant APS process. So what this means is we can, in a matter of 2 minutes, get your client's medical records, opposed to waiting 2-3 weeks. So if I were to hit yes to this, this modal will pop up. Click Get Started. And all I need to do is type in the name of the facility that I belong to. So for example, let's say I belong to Kaiser. They have a popular button here. I would just type in my username, password, connect account, and assuming I typed in those credentials correctly, about 2 minutes later, we'll have that APS. So that way, when Nationwide or whichever company asks for your medical records, there they go. So I think we've shaved, I think somewhere around 12 days off our average over the last 12 months, most in terms of case duration, mostly due to e-delivery. We launched the instant APS process 3-4 weeks ago. So this was our next biggest item to make a significant impact in how long cases take to start to finish. If your client doesn't know their username or password, just click these links. If they don't have an account, they can click those links. And that's the instant APS process. You have another shot at this though. So if you pick no, which is very common, sometimes at this point you just want to do the application, that's fine. When the insurance company, let's say Nationwide, it says, hey, we need, Dr. Brown's medical records, we'll actually send a link directly to your client. You're CC'd on that email. The client will actually also get a text message with that link, and it will give them a very similar window. Hey, type in your credentials to Dr. Brown's office, and then again, 2 minutes later, we'll get those medical records. If your client doesn't like the electronic health records process that we provide, no problem. We can always revert back to the traditional APS process. It's just slower. So I have a couple more questions. We'll say he's married. Any yes questions will have sub-questions, or typically they have sub-questions. In this situation, I'm just gonna skim through this. We can add banking info now. If you click yes, you just need to plug in the routing and account number. We will validate this information, so we'll make sure the bank account belongs to someone affiliated with the policy, and then it's a valid open bank account. So I'll just hit no. Excuse me. And then we do need to schedule an exam. So this is our real-time integration with exam 1. It will pull in the availability for my client's home address. If I need to change the address, let's say to my client's business, just click the button, I can do that. If I need to skip the exam, just choose a reason. What I see down here in these bold days are the available days. All right, so when I'm talking with John, at this point, I'm telling him about the exam process, and I'm saying, hey, pull up your calendar. Let's see what's available. I can go to the next month if needed. All I need to do is find a time. Let's say I want this 8 a.m. Click schedule. Yes, schedule it. We'll send calendar invitations to you as the agent and also to the insured. There's also a PDF in there with some details of the exam process. That way it's on your client's calendar, which can help. And then 2 options for the DocuSign. Sign via email would be, if I'm doing this as a phone sale, I would click sign via email. John would get an email directly from DocuSign. It has instructions for his access code. For everyone on the demo, it's the last 4 of John's social. Alternatively, if I have John with me right now, if John's doing this himself, we'll hit sign now as insured. I'll consent to using DocuSign. And I got my full application filled in. So this used to just be a much longer process to get the right forms, to run the illustrations, to fill things out, to make sure it's in good order, to get signatures, then to get it back to back 9. So a lot of that has been automated. All I need to do is hit these kind of DocuSign tabs over here, and it'll prompt me where to go. So I'll hit next, sign, 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 finish. So at this point in time, you as the agent will receive an email for you to complete the DocuSign process, and then when all parties e-sign, the case will show up within your BOSS account. So that kind of concludes the Nationwide IUL illustration capabilities, in addition with the e-application. At this time, if you have any questions, I will take them. Looks like we got a couple. Can you explain what reduction means? I would be happy to. So when we were on the illustration design page, I referenced reduction a couple times. So that the way that this is done is we assume the default interest rate. With Hancock, it's 6.12, and with Nationwide, it's 5.76. So some clients and or agents may want to say, well, I'm going to get 33.74 of income based off of 5.76, but I want to stress test this, and I'm going to assume that I don't get that. It is pretty likely that your client's going to get this, just based off of historical returns. But of course, some people are going to want to say, hey, well, what happens if? So I'm just going to change this from a default to 10% reduction, then run illustration. This is 5.76, and it should reduce by 10% in this example. So now it reduced down to 5.18, and I can see that my income dropped quite a bit. So that's what I mean by reduction. Yes, all the webinars are recorded to share and watch later. Since you register for this, you will get a link, or excuse me, an email with the copy of the video. And then also we have a YouTube page, but I typically suggest people to just head on over to our Facebook page, not my personal Facebook page, excuse me, our business Facebook page. And we'll have updates here, like on Tuesday we had a webinar, and there's a good chance it's just in our feed, but if you want, you can go to the video section and we can take a look at all of our videos. Is an APS required for Nationwide? I can't say, it depends. So insurance companies will try to approve cases without medical records because cases are going to go faster, and also carriers don't have to, pay for records. But, at the same time, in this example, Nationwide has $430,000 at risk. If they have a concern because they found something in your prescription database check, they found something on an exam, they found something in MIB, yes, they're going to order medical records, or if the case is just big enough, they will order medical records. Okay, I have some questions that don't quite make sense, so I'm not going to talk about those. Well, there's a question here, is it better to wait? Okay, for the APS. I think you may mean with our instant APS process. So if you utilize the instant APS process, we actually won't send the APS to the insurance company until the carrier requests it. So it will be on file, and that can be helpful for us and you. If there's concerns, we have information. We can, answer questions quickly. We can evaluate, is this going to be an issue with the insurance company? All right, everyone. Thank you so much for attending. Have a fantastic Thursday and weekend. Appreciate your business. See ya.